Chinese IPOs may be poised to take off again as companies line up to raise capital following a 9-month moratorium on new share sales. Bloomberg's Stephen Angle is on top of that story, and he joins us from Beijing this morning. Steve.
Hey, Haslinda. Well, I wouldn't necessarily say that the floodgates are open yet, and these offerings definitely are not huge by China's standards, but Chinese companies nevertheless are indeed dipping their toes back into the IPO market now that the moratorium has been lifted. It's believed regulators are letting smaller companies go public first to kind of test the market's readiness for these share sales. Ernst & Young forecasting earlier last month that IPO funds raised on the mainland stock markets could hit as high as 137 billion yuan or 20 billion US dollars this year. At least 32 companies have been given approval for new share sales so far. The first one, China's biggest producer of herbal lozenges, Guilin Sanjin Pharmaceutical. It will be the first IPO following the lifting of the moratorium. The company, founded way back in 1967, says its offering was 584 times oversubscribed in the electronic tranche after offering 37 million shares to individuals and institutional investors through an online offer. The company raising 910 million yuan, 133 million US. That was 44% more than it had initially planned. It's likely to begin trading in Shenzhen later this month. Number two is going to be Zhejiang Wanma Cable Company, increasing its amount it will raise in China's second IPO this year by 68% to the equivalent of 84 million US dollars. Your-Mart plans to sell as many as 50 million shares in Shenzhen. It will be number 3 on the docket. It's the biggest retailer in southeast Hunan province, and Reuters is also reporting that regulators have also given the go-ahead final approval for Sichuan Expressway to list in Shanghai to raise at least 1.4 billion yuan. The Shanghai Composite is the world's third best performing major stock index year to date after Lima and Jakarta. The Shanghai Comp has surged more than 65% year to date, yesterday closing above 3,000 for the first time in more than a year. It is also up 0.4% in the early going today. But if we stretch out the chart over the past few years, Haslinda, the market is still just half what it was when it hit its record high of more than 6,000 points on October 16th, 2007. So, it depends on how you read it, Haslinda. Is 65% up year-to-date a bubble, or is it undervalued compared to the historics going back to 2007? Your guess is as good as mine.
Yeah, we'll have to check with the expert. Stephen Angle, thank you so much for that.